with a current dividend yield of almost 4% and a dividend growth over the last year of 10%. The Dutch supermarket titan Ahold Delhaize does look like a promising investment for any dividend investor. With their 19 local brands all over the US and Europe, they own and operate more than 7,600 stores, which is actually more than 3 times the stores that Target owns. In this video, we will dig into the business model and the markets of Ahold Delhaize, analyze the moat by doing a Porter's 5 forces analysis, and have a look at the latest financial statements. We'll also compare the valuation to their peers and do a discounted cash flow calculation to see if they are fairly valued. In the end, we will see if Ahold Delhaize is a good long-term investment for us or not. Ahold Delhaize has the ticker symbol of AD on the Euronext Amsterdam exchange. They are working in the consumer sector and were founded 2016 by a merger between the Dutch Ahold Group and the Belgian Delhaize Group. Right now they have around 414,000 employees, the headquarters is in Zaandam, Netherlands, and the market cap sits around $27 billion. First, let's start by comparing the total return of Ahold Delhaize against the total return of the S&P 500. And what we can see here over the last 10 years is that the performance was very similar up until the last couple of months. In the last couple of months, we can see that there was a significant drop in the stock price of Ahold Delhaize compared to the S&P 500. But in general, it looks like both of the charts are very aligned. When we compare the performance of Ahold Delhaize against their peers, Ahold Delhaize is the orange line here, we can also see that they are basically sitting right in the middle of the pack. The companies that I'm comparing it against here is Target, Costco, Walmart, and the European Metro Group, which is a company that has a very similar business model as Costco. When we compare the total return against the peers of Ahold Delhaize, and I am comparing it here against Target, Costco, Walmart, and the Metro Group, which is a European company with a business model very close to Costco actually. We can see that Ahold Delhaize is sitting right in the middle of the pack with the orange line here. The only company that it outperforms significantly is Costco in this pack. Ahold Delhaize is a group of different local brands, as we said in the intro. The main focus areas is the United States and Europe, and they do around 2/3 of their business in the US and around 1/3 of the business is done in Europe. When we scroll down a little bit and look at the different brands that belong to Ahold Delhaize, we can see that brands like Food Lion, Hannaford, Stop & Shop, and the Giant Company belong to them. And in Europe, the biggest one is Albert Heijn, the online shop Bools, which is in Netherlands and Belgium, Ethos, Delhaize, and Mega Image, and some smaller ones also belong to them. They also have joint ventures with Indonesia with the Super Indo brand and with Portugal with the Pingo Doce. The food and grocery market is not known for the huge growth rate. But when we look at the data from 2022 to 2030, we can still see that the CAGR until 2030 should be around 3%. And what I find even more surprising is if we look at the e-commerce sales in the grocery sector. The blue line is the estimation from pre-pandemic and the green line is the estimation after the COVID pandemic. Right now in 2023, we can see that only 13.5% of the shoppers, of the grocery shoppers, are using e-commerce and online sales. What I find even more interesting is if we look down here, we can see that 75% of the online shoppers are still picking up their stuff from the stores or from some pickup location itself. Only 25% of the shoppers are using home delivery as a service. This is actually lower than pre-pandemic levels. When we jump back to the annual report that we just saw, we can see that they are not only increasing the store count, but they are also working on increasing the pickup points in Europe and also in the United States. So they have already identified this trend to e-commerce and more pickup, and they are just building up these points and also working in cooperation with gas stations and so on. And their online shopping service Bol will also benefit from these pickup points. So here we can already see that Ahold Delhaize, even though they have these many smaller localized brands, they are still benefiting from synergy effects between all these brands, because in the back end, they are all using the same system and they can use the same infrastructure basically. Not only are they working on these regular pickup points, but they are also experimenting with different kinds of innovative new concepts. Like for example, here you can see a package-free pickup point, where this woman in yellow coat, for example, she brought her own glass to fill in her cereal, for example. But you can also buy like noodles or rice or beans or stuff like that. And if you don't have your own packaging, you can buy or get your own packaging from here. So this does not only help to reduce packaging waste, but it also helps Ahold Delhaize to keep their packaging costs in check and to lower the packaging costs. With their Albert Heijn shops in Netherlands, they were one of the first players in Europe to actually implement self-checkout counters. And this also shows that they can really react on localized customer demands and localized trends in different regions, in different countries with their localized brands, but still benefit from networking and synergy effect between these different brands. This makes them very flexible and makes them able to react very quickly to new trends, to regional trends also. When looking at the mode of Ahold Delhaize by doing the Porter's 5 forces analysis, I think the threat of new entrants, first of all, is medium. New and smaller grocery stores open up all the time, and there's always the threat of increased e-commerce. But because of their size and the synergy effects, Ahold Delhaize has a good market position here, and with their Bol online shop, they are also targeting specifically the e-commerce sector. The threat of substitutes is always high in the retail sector, but Ahold Delhaize takes good measures here to stay relevant with their huge portfolio, different brands, and also focus on these pickup services, e-commerce, but also more integrated like AI solutions, apps for shoppers to just improve the shopping experience. Like the threat of substitutes, the competitive rivalry in the retail sector is also very high. But because of their global diversification and huge brands, the sheer size of Ahold Delhaize, they still have a good market position here. Bargaining power of the customers, again, also very high. It's a very price-driven market in the retail sector. The switching costs are not there, so if a competitor of Ahold Delhaize offers some similar products to a cheaper price, customers can switch to them very easily. There is no big barrier or anything here. The bargaining power of their suppliers is quite low for similar reasons. There are also a lot of different suppliers in the retail sector that are offering the same or very similar products. And they are basically only competing against each other with quality and price. So Ahold Delhaize has some power over the suppliers in this regard. To sum this up, to have a moat in the retail sector is quite tough because it's a very price-driven market with low entry barriers and low switching costs. But because of the sheer size and the global diversification of Ahold Delhaize, they have some power here. And I would think that their moat compared to their competitors is a little bit higher. Let's have a look at their financials now. And let's start with the operating profit and net income. Here we can see that the operating profit is generally increasing, but from 2022 to 2023, there is actually a slight decrease. This should recover again in the next years. The same is actually true for the net income, but the net income is a bit more all over the place. From 2022 to 2023, we can see also the dip, but it should recover in the next years again. The net margin and operating margin are fairly stable. We have some special effects in 2020, which we can see here, but overall we can see that the trend is quite stable. Operating margin sits at around 4%. And the net margin sits at around 3% here. The balance sheet also looks quite clean. We can see that the leverage, EBITDA to debt, is only 2 times here. This is very nice to see, especially for a company that is focusing on merchant acquisitions like Ahold Delhaize does. The revenue is also increasing steadily, and so does the levered free cash flow. But we can see in the last 5 years, since roughly 2017, 2018, around here, the trend has slowed down, and especially the free cash flow growth has stagnated a little bit, and there was not that that much of growth here, unfortunately. This is actually one of the major drawbacks that I can see with Ahold Delhaize. When looking at the latest numbers, by having a look at the Q3 report that was released in November of 2023, we can jump down here to the summary. And here we can see that they just lowered their EPS guidance from before it was around 2022 levels, so to keep it stable in the last years, to it will be slightly below the 2022 levels. So the EPS will decline most likely a little bit in the year 2023 compared to the last fiscal year. But they also increased the free cash flow guidance from 2 to 2.2 billion euros up to 2.2 to 2.4 billion euros. So that's an increase of almost 10%. So that's an increase of around 10% even. Also, they just announced that they will have a share buyback program in 2024 of 1 billion euros. This is actually the same amount they bought back in the last year. We can see here they also had a 1 billion share buyback program in 2023, which was just finished. Also, they are targeting a dividend payout ratio of around 40 to 50%. Right now, they are sitting at 47% actually. And talking about dividends, we can jump over to Seeking Alpha to our dividend scorecard here. And we can see that the forward-looking dividend yield is 3.6%. The dividend yield for the last 12 months is actually almost 4% right now. The 5-year dividend growth rate sits at 9%, and in the last year, they even increased the dividend of around 10%. So when we sum this up by using my checklist, we can see the revenue growth over the last years was a bit higher than 6%, but the 5-year CAGR was 7.5%, which is definitely a green checkbox for me. The net income growth rate on a year-over-year basis sits at around -6%, but the 5-year CAGR is still around 2%, which is fairly below my target of actually 10%. But the explanation of Ahold Delhaize is that this is mostly due to increased operating costs and a little bit lower sales in 2023. But the expectation for the next years is again that this will increase year over year again. For the free cash flow, it's actually the same. The year-over-year value is minus 17% almost, and the 5-year CAGR still sits at 1.4%. Again, here the trend for the next years is that this should increase steadily again. The free cash flow yield sits at 7%, which is definitely a green checkbox for me. And we already saw that the balance sheet of Ahold Delhaize is very clean. They don't have so much debt. The leverage is 2 times debt to EBITDA, which gives them quite a strong and fortified balance sheet against the increased interest rate that we have right now. So again, green checkbox for me. We already established that Ahold Delhaize is a steady dividend payer, and after the recent stock dip, their dividend yield right now sits at 4.8% as of the day of this recording. The 5-year CAGR and dividend increase was 8.6%, but again we saw also that in the last year alone they increased the dividend of around 10%. So again, green checkbox for me. We also saw that the margins and the return of invested capital is quite stable, sits at very stable levels. We have some fluctuations on a year-over-year basis, but the overall trend seems to be quite good. So again, green checkbox for me. When we compare the valuation of Ahold Delhaize to their peers, and I used the same peers as before here. We have Target, we have Costco, we have Metro Group, and we have Walmart. Ahold Delhaize in the orange line is the lowest valued of all of these companies. One thing to note here is that Ahold Delhaize is a European company. European companies are usually a bit lower valued compared to the US peers, so I also don't expect the valuation of Ahold Delhaize to come up to the same levels as a Target has or as a Costco or Walmart has. When we look at the PE and the price to cash flow multiples of Ahold Delhaize, we can see that the 10-year trend is pointing downwards and we are right now trading at the lower end of their spectrum. So again, this seems like Ahold Delhaize has a fairly low valuation at the moment. As a dividend payer, again, I also like to look at the dividend yield. Here I looked at the 5-year trend of the dividend yield. And again, we can see that with the slightly above 4% dividend yield that we have right now, they are trading at the upper range of their dividend yield. It is fluctuating between 3% and 4%, and it did reach the 4% a couple of times over the last years, but it always dropped down to lower values quite quickly again. So if you want to lock in these high 4% dividend yield that they have right now might be a good time. Before deciding if Ahold Delhaize is a good investment for us, we should also look at the fair value of the company. So when jumping into my fair value calculation spreadsheet, and I plugged in the numbers here that we just saw in the last quarterly report or in the financial models, we come up with a fair value that sits around the current stock price actually a little bit lower. But the main reason for this is, if you look at the discounted cash flow analysis, where I calculate the terminal value with the price to free cash flow multiple, this sits at a very, very low value. The price to free cash flow multiple of Ahold Delhaize is only 4. If you look at the sector median, this looks much higher at around 13. So if we correct this up to a value that is more in line with their sector peers, this value also comes up quite a bit. Still below the other values, so I would take it with a grain of salt. But the average value, including my margin of safety of 10%, sits at around $27.34. So when we look at the chart of Ahold Delhaize, where they sit right now, we can see that the current price is at around $29.43. Here I sketched the trend channel in the monthly chart, and you can see that since 2011 up to now, they every time they reached the bottom line of this trend channel, they bounced back immediately, and there was quite a good reaction to the upside again. Right now we are almost sitting at the lower end of the trend canal, and again we just reached the moving average of 50 months in the monthly chart. So when we sum this up, we have a couple of risk factors on one hand and growth factors on the other hand. The first risk factor is that Ahold Delhaize is operating in a highly competitive grocery and retail market, and we saw that they have a moat, but still this market is very consumer trend and price driven, so it is very easy for customers to switch to a different competitor of Ahold Delhaize. Still, with the size and the global diversification, I think they lower this risk, and they have quite a strong position in this highly competitive market. The revenue and sales growth of Ahold Delhaize did not lead to a significant increase in free cash flow over the last 5 years at least. So as they already increased their free cash flow guidance for 2023, I hope that this trend will not continue, and I would love to see Ahold Delhaize to increase their margins, but also their free cash flow in the end. There is also the trend to online shopping and e-commerce, but with their online store Bol and their pickup stations and so on, they are already reacting on this market. Also, from what we saw in the market trends, especially for the grocery market, this online shopping trend is only increasing very, very slowly. And even the majority of the people that are purchasing the stuff online are still picking it up at the stores itself or at these pickup stations. On the other hand, we have the growth prospects of Ahold Delhaize. First of all, they are returning a lot of value to their investors by paying a dividend, but also by issuing share buyback programs year after year after year. So we saw that they just finished the repurchasing program for 2023, and they already announced a 1 billion repurchasing program for next year again. They are quite diversified on a global level with the US market and the European market, and even they dip their toes into the Asian market with their Indonesian partners. But by keeping these local brands, they still keep in touch with the local trends, and they can also react very quickly on these local markets, but still keep the network effects of the big Ahold Delhaize group, and by using synergy effect between the different brands. They are also focusing on omnichannel growth and on innovative concepts like we saw, for example, with these packageless pickup services. They also have their online shop bol.com, which is active in Netherlands and Belgium. And because this is kind of a special case within the Ahold Delhaize group, I think there is a possibility that they might spin this off in the future. For these reasons, and because of this extraordinary combination between global footprint but still keeping in touch with the local brands, I think Ahold Delhaize is an extraordinary company. And if you're still looking for a defensive consumer stock, probably a dividend payer, I think you should definitely consider Ahold Delhaize. I, for myself, am not invested in Ahold Delhaize right now, but I'm actually thinking about adding it to my portfolio right now. Please keep in mind, I am not a financial advisor. This is only my analysis that I share with you for your entertainment and information. But before buying any stocks, please do your own research. Please let me know your thoughts down in the comments below. Do you agree with my analysis, or do you have any additional points that I maybe missed? That being said, thank you very much for watching, guys, and see you next week. Bye-bye.